There's going to come one day where things really bottom out and sellers are going to be calling their agent to sell. They're going to hop off the fence and say, I'm ready to sell now, because every expert that you read an article about or hear on TV, there's one thing they can all agree with, and they feel like transactions are going to be lower this year.
Ricky Carruth, he's a real estate agent in Gulf Shores, Alabama. He dropped out of college to start selling real estate at 20 years old. Within 3 years, making $1 million, then lost it all in the crash. So he's got a little perspective on on how to navigate choppy water. So he ended up rebuilding his business in 2014, selling 100 houses a year as a single agent. Now he's a prominent real estate coach, mentor, educator through his Zero to Diamond program. How you doing, Ricky?
Good, man. How you doing? Good to see you.
Doing good. So with everything that's going on in the market, interest rates kind of doubling, but I mean, inventory is still low, housing's still hot, especially in a lot of the strong markets, and I'm sure it's still hot where y'all are at. And you can still get in situations where there's multiple offers and it's gone first week. I'm seeing that in the comps. It's not gonna go forever, but what are you seeing as we're kind of getting into changing winds?
Yeah, no, it's slowly slowly shifting right now, right? If you're out there trying to pick up listings, you're feeling the change happening. More sellers you're talking to are a little more open to the conversation. I mean, we picked up more listings in the past 2 weeks than we have any other 2 weeks, in the past 6 months. What's more interesting is the sellers who are open to at least talking about it, whereas you can tell that they're kind of on the fence and more open to and getting closer and closer to moving forward to list their property. I think what we'll see is that, just going back, there's just too much demand and not enough supply, even though interest rates really knocked interest rates. People don't realize it, but interest rates did knock a lot of buyers out of the market just due to debt to income ratio. But we have such a massive amount of demand out there that it's going to take a lot more to really balance things out a little bit. And that's because of inflation, of course. But I think what we're going to see is this trend continue. It's going to be real interesting to see where interest rates really go and where they kind of top out at. We're your last guest here was talking about back in the 80s when it was 18%. People keep talking about that. That was that's what they kind of compare the current inflation rate to. And but what's so different is, back then to now is the prices, right? The typical mortgage rate is like $2,500, which is up like 40% in the past 2 months at an all-time high. And it continues to push buyers out of the market. I think what we'll see as we inch closer and closer is this moment of euphoria for agents. Whereas if you've been the agent who's out there doing the things that, a lot of coaches and trainers teach you to do, which is go out there and build relationships with people in your market, build that database, remarket to these people, and really build a brand. There's going to come one day where things really bottom out and sellers are going to be calling their agent to sell. They're going to hop off the fence and say, I'm ready to sell now, because every expert that you read an article about or hear on TV, there's one thing they can all agree with, and they feel like transactions are going to be lower this year. The National Association of Realtors is calling for 2 to 4% unless, and they actually have this caveat in there that unless interest rates go up higher than expected, it could transactions could go down as much as 10%. Ian Shepherdson said that he's looking at 25% less transactions this year. So everybody kind of agrees that there's going to be less transactions. But the one key factor for real estate agents really to keep in mind as we go through this shift is that even in the worst case scenario of the predictions of, say, 25% less transactions, there's still 75% of the same amount of transactions, which is a lot, right? And so that's what we have to kind of keep our eyes on and realize that, through the ebbs and flows of the market. And I liked a lot of stuff your last guest said about not being scared to buy real estate right now. Absolutely. And you talked about rent going up. I mean, prices are higher, but at the end of the day, we're looking at our rate of return here, and rent has went way up, way up. And when you look at that, heck, real estate in certain situations is even a better deal than it used to be from the investor standpoint, when you're buying rental properties. He talked about the low hanging fruit going from commercial to residential when things get bad in either sector. That's very interesting, to kind of move around, to the low hanging fruit. Right now, yeah, it's kind of tough in both areas, I would think. Of course, he's talking about farmland, I believe, but I kind of work a little bit of multifamily. That's a tough market. That's almost tougher than going out and trying to get a
Yeah,
primary
I
home to
mean,
list.
they're in low inventory too. I mean, they've got the same
Crazy low
problem.
inventory.
So,
Yeah.
on like you mentioned, you picked up a lot of more new listings. I'm just want to dig into the demographics there. So, and this is why a guy I met him over the weekend. He raised like a $38 billion fund, so he's got a little bit of experience in real estate, and he was saying like this is the first time in pretty much everyone's life, most at least if you're active in the market, it's probably the first time in your life that the mortgage rate is lower than the inflation rate.
Yeah.
Meaning, if you've got a 2.5% mortgage and your option out there is now low fives, could end up being 6 plus. At that point, there's a new thought process that comes where if you don't have to sell, like why on earth would you ever do that? So the
Yeah.
demographics, are you seeing those folks that they were already going to upgrade, or are these people downgrading, or what are you thinking?
No, and you're absolutely right, man. The primary home market is going to continue to be tough because like they didn't really have anywhere to buy anyway before interest rates started coming up. So that was already an issue there, even the people that really wanted to upgrade or downgrade. So they really couldn't do that because there wasn't even any inventory. Now they're like, it's like kind of a double whammy because now they're like, well, I'm locked into a 3.5%, or I'm locked into a 2.8 or a 3.1. Why would I go out and not only buy at these crazy high prices, but also at twice the interest rate I have currently? So now we're at even a more retraction, I believe, of primary home owners going out there and listing properties. But it's something I've been preaching a lot about over the last couple months, and that is again going back to the low hanging fruit that your last guest was talking about. The low hanging fruit for me right now in the residential sector is going to be your absentee owners, your second homeowners, your vacation property owners.
Yep. Or they can cash in.
They can cash in. They can cash in. They can set out for a second and kind of see what happens. You're never going to sell at the very top. You're never going to buy at the very bottom. We got to be as close as it gets to the best time to maybe think about pulling the trigger if you're thinking about taking some cash off the table of an investment, a second home, an absentee owner. And so I've been preaching go after those. I'm in this secondary vacation market. We're on the beach. We sell mostly vacation properties, condos and stuff on the beach. So, I mean, one of those might have been a house. I think we listed a lot, and then the rest were condos. So I'm kind of sticking to my guns here that, moving forward and everything, that's kind of the best sector to hit are those second homes, absentee owners, vacation property owners, investment properties, the rental properties, and people like that might want to take cash off the table. And look, what are they going to do with the money, right? They're going to 1031 into so that's an issue as well, right? Replacing that. And what are we going to do with the money? But there are listings coming up. Somebody's listing properties,
Yep.
right? You can't just sit around and say, oh, well, nobody's listing. I'm just going to pack it in and just not try. If you want to be successful, you got to continue pushing through.
Yeah,
And
and I've been telling agents too. It's like agent, because investors now make up to like 25% of the buyers. So understanding what investors look for, whether that's local investors or your big guys, understanding what they look for can help you transact more, both working with sellers but also working with with them as buyers, because
I like what
ultimately
your last
the
guest.
agent that has the database and knows and has these tools, it's pretty easy because you're a transactional business. An investor, there's a little bit more. They can actually take a loss. The agent doesn't really take a loss outside of maybe marketing dollars and time.
I like what your last guest said about something comes across his desk, he's gonna do that deal. He doesn't care if it's farmland, commercial, house, whatever the case may be. Right? Same thing here. Investors come across, help them. We're just in the business of helping people, right? Figure out what they want to do, why they want to do it, and help them do it. Where people get us confused with salespeople or sales. It's not really sales, really, if you think about it. It's more service oriented.
Yep.
We're just trying to evaluate what someone's trying to do, help them create a game plan around how to accomplish that, and then help them execute, you know?
Love it. Love it. Well, thanks for coming on. Are you going to be at the shareholders event in June?
I sure will.
Okay. I'll see you there.